Hey folks, Gary Dean here with Sentiment Timing. This is a midday update that I'm going to do. I think it's pretty important that we're looking at what's going on with the market right now. So this is a 4-hour chart. You can see that we made it right into our primary accumulation zone. This is what's important is we just got a liquidity buy signal right here. And you can see each time we've gotten these signals, we've seen the spiders. With this time, we got it right in this area here. So the spiders were at 677. We rallied up to 694. So this could be important. We got to make sure that we could get a quick washout and back up. But typically, these are good buying signals there. Here you can see our liquidity divergence indicator. Actually, it's going in and out, so it's not set yet, but it should be getting close. Typically, when we start to see that the green ball popping up and going away, it's pretty much a sign that we're going to get some type of buy signal, and you can see it right here where we had it, and it came a couple times. But let's go to a shorter term chart and see what's playing out. And here you can see that we have this. This was concrete right here. This buy signal. We saw the spiders go from 55 up to 59. Nice little bounce on it. But we're seeing selling coming in right here. These are those purple bars on the matrix. So this is the thing though that's kind of important is look where my cursor is here. So you can see once we got this drop right here, we just saw the buy sell pressure was just going straight up. So buying this dip would have made sense on it. Now another thing is look where my cursor is here. Again, we saw liquidity moving up. We've gotten a couple buy signals. But the only thing is we're seeing sellers right now, and that's the purple candles that we see right there. So as long as they can hold the support here at the 656.28, then the bulls are probably going to head up to the 659.87, and they may come up and try to close this gap at 660.91. We just got into a new divergence with the duration indicators trying to turn up right there. So that's a good sign. And if we just move to a 5-minute chart, this is probably what's pulling the market down. So you look at those for the longer term. What do you see the actual trend in the next couple days? And again, you see these buyers are stepping in. We see buy sell hanging out up there, and we're on a divergence of full duration for our timing indicator on it. So the 5-minute chart though, so here you can see that this was a good, right here we had the full duration on it, got the buy signal. It's been chopping around. And now what happens is we're seeing liquidity head down. So this is pulling the spiders down. And you can see it right here too, that we don't really have a divergence because we didn't make a higher high. But if we do, we're probably going to find sellers unless we spike up on that. So right now, I'm more on the side of playing it cautious. I don't know if I'd want to, but I'm seeing reasons to look for some type of buy to happen. If we get a quick flush down and test these lows, I think we're going to see our liquidity back down, having some full gas in it. And then from there, we'll probably come back up and test them. But we do, right now, I wouldn't be surprised to see us test these highs first. And really, the main reason is, we're getting on a new buy signal with duration. We have liquidity that's hanging up there, and it's it's been a great indicator for us, the liquidity indicator that we have, because here you can see with the spiders on it, we made it. This is an exact top where we got a spike up, so we didn't have a divergence on our buy sell. But you go down here, and this is where you're seeing the divergence. If you just follow my cursor up, you can see the spiders gapped up here. We have what were the institutions doing? Liquidity was selling this, and that's what happened here. So now we're actually seeing buyers coming in. So institutions are buying this dip, which is telling me whether we have to bottom today or tomorrow, we're probably going to get a pretty good rip, and it's going to take the S&P up 15-20 points. And that's really the way that I've been making these trades is, where are we on a long term? And you can see a buy signal trying to pop up here with liquidity. We're in support zone right here. If we have to head lower, 652 would be the next buy, or possibly even at the 649. But being that we have buyers stepping in, the institutions, it has me thinking that we want to be buyers on the next, if we get a dip on there. Short term, again, really we have to just wait, because we're going to be, this is going to pull give the bulls a little bit of a headache trying to move up as this is moving down. And really what's going to happen is, if we do get that pop up, we're probably going to get some bearish divergences. But again, the buy sell pressure has been actually on the bullish side here so far. It looks like it's trying to turn right now. And again, I think it has a lot to do with our duration signal that's on the 5 that's trying to turn. So I think if you took a straddle, it would actually be a really good trade, and take the 257 put and call trade. If we come down, we could see the S&P coming down to the 255. If it goes up, we're probably heading up to the 261. So there's enough room in there to be able to cover it either side. And if we get what would be better is a pop up where we sell the calls that we purchased and then ride the puts down, where we could see some liquidity having to leave the market, forced out because of margin calls. So that would be the best setup, is taking the 657 call put trade, wait for it. If we come down, I would be looking to sell the puts somewhere around that 652. And just run with the calls, because they're probably going to be worthless, but you'd be able to make money on it. And if we head higher, look to sell the calls up at the 661. So hopefully that helps you. One last thing that we are running, I'm not sure who saw the email today, but this is a 1-day special that we're running, and it ends tomorrow. It's already set in the actual the Stripe or where we process all the payments. So it's for 1 day. It ends tomorrow. We lowered it $100, and we're just doing it because we do believe there's going to be a significant move tomorrow. And on top of the if you buy the software right now, I'm going to give you the Discord, our trading room link, and you can come in there and you can watch us trade, because I'm going to be watching the IWM, especially if that falls. But it looks like IWM is actually squeezing some bears today. So, and if that happens, then what happens is we're gonna anticipate that the spiders are gonna be the ones that we get the washout today, and then the big squeeze tomorrow. And I'm pretty confident that if we see that type of move, the software will be paid for it 10 times over. And but really, that's the thing. If you guys join right now, the $3.99, it's $100 off. I give you the link into the trading room. Come watch these trades live. I put them out, and hopefully we'll see you on the inside.